Boom, Team JQ. All right, let's go over your Monday market minute on a Monday. 2 weeks in a row, doing better. And I got my COVID shot, so I'm feeling a lot better. This is day 4, and yes, it does knock you on your butt a little bit, but that was shot number 2, so I am fully vaccinated. Yes, let's go forth and conquer and get out there and meet some more people. But let's get into inventory. We had less than a 1% change, so that's not a good thing. We want a greater than 1% change to the positive. We're sitting at 34.34 last week, and now we're sitting at 34.50, and we need to be sitting around 4,000 to change it from a seller's market back to a flat market. We haven't been in a flat market in a while, and we need a lot more inventory, at least 400 homes week over week on the market to change that market, or to change this current market. But when I look at the numbers for condos, townhomes, and detached homes, nope, numbers didn't change much, less than 1%, which coincides with the inventory change of less than 1%. Also, your condos, townhomes, and detached homes greater than 30, still sitting at about the same numbers as last week. So what does that mean? Maybe you need to check out those condos, townhomes, or detached homes that are over 30 days to see if that inventory has something that you had checked out that you said no to, and could possibly be something that you want to buy now. Let's go into interest rates. 30-year fixed, 28.34 or 2.834. So it's dropped. Your 15-year fixed, 2.134. Your 30-year VA is 2.597. So interest rates have come back down from our March boost to over 3.1. Now they're settling back down at around 2.8 to 2.5. 2.8 for the 30-year fixed, 2.5 for the VA fixed. So talk to your lender, get pre-qualified, get that interest rate locked when you find a home. Now let's go into Qtips. And speaking of pre-qualified, one of the Qtips, if you're out hunting for homes, you should have a pre-qualification letter. You need to get your pre-qualification letter. If you find the home of your dreams and you are the only one putting an offer in, if your offer doesn't have a letter of pre-qualification from your bank, that offer doesn't count. That's just the bottom line. That offer will not be considered, and they'll still say there's 0 offers on the table because you are not pre-qualified. They don't know that you have the money, you have the financial ability to buy the home. So get pre-qualified. Tip number 2, how to get pre-qualified. So how to get pre-qualified? You call a lender. The lender is going to talk to you for a little bit, talk to you about your credit score, pull your credit. From pulling your credit, he's also going to ask you for 1099 if you're a 1099 worker, W2 if you're a W2 worker. Then they're going to go and ask you for tax returns for the last 2 years. They can sometimes get away with the last 1 year if you don't have the previous 2 years. Also, they're going to look at bank statements and stuff like that. The bottom line with what they're doing is they want to make sure when we come together and we work as a team to purchase your home or help you purchase your home, we are not putting you in a worse financial position than you are currently. That is the bottom line. We don't want to put you in a house broke situation, i.e. you pay for $1 million home, and yes, you can pay for $1 million home and you can survive on $1 million home, but every last cent of your money goes into that $1 million home for mortgage payment, tax payment, insurance payment, interest payment, etc., utilities. So goal is put you in a better financial position than you are currently. Let's go into appraisal gap contingency. So tip number 3 is appraisal gap contingency. What the hell is that? Appraisal gap contingency is a contingency that we write stating that if the appraisal comes in low, we will put a X amount of money towards over the appraisal to purchase the home. If the appraisal comes in, well, for example, we say the house, we put an offer on a house at 525, and we say if the appraisal comes in at anything above $500,000, we will put X amount of dollars, i.e., if it comes in at 505, we will put $20,000 down to uh, cover the gap versus the appraisal to the offer. Now, also in that appraisal gap contingency, we put the language in that says if the appraisal comes in below $500,000, we need to renegotiate. Bottom line. So that is the appraisal gap contingency. Recommended for all VA and conventional guys because hey, if it does come in low, that's the way you can say I'm the strong enough buyer to buy this house, even if it does come in low. I have a little bit of money to set aside to say, yep, we're good. Do talk to your lender about that and state to your lender that hey, I might have to put $10,000 or $15,000 down as an appraisal gap, and make sure that he is okay with that. Because just because you wrote it in the contract, if you didn't talk to your lender beforehand, your lender might not allow the appraisal gap contingency, because if your reserve funds go to zero because of this appraisal gap, they might not allow you to buy this house or that house. But those are my 3 Q-tips. I hope you guys have a wonderful week. Check out my informational videos when they come out, and I'll talk to you guys later. Team JQ out.